Hello, Professor. We are Group 20. Today we will be presenting on Vestas Wind Systems AS. We will go through the background of global wind industry, company overview, three key indicators, short and long-term forecasts, and finally the company's strengths and outlook. Let's go to the first part, background. Vestas is a Danish company founded in 1945 focusing on wind turbine manufacturing, installation, and service. Its key model includes the 4 MW platforms. Vestas aims for zero waste wind turbines by 2040. In 2022, revenue reached 70.3 billion euro with 494 million euro in net income. In North America, it works with over 1,200 suppliers with a supply chain expenditure of about $1.9 billion in 2023. Its core mission is to lead the global energy transition through localized production, ecosystem partnerships, and digitalized turbine performance service. Let's go to the next part discussion. We focus on three key indicators. The first indicator is total revenue. From 2020 to 2024, revenue shows a fluctuating upward trend. Revenue dropped in 2020 due to inflation and supply chain issues, but recovered strongly in 2024. The increase, driven by price adjustments, improved project quality, and lower warranty costs. The second indicator is order backlog. In 2024, Vestas achieved a record 68.4 billion euro backlog, with an average 11-year duration. Revenue visibility and cash flow stability are extremely strong. The last indicator is EBIT margin. EBIT margin dropped to -8% in 2020, but rebounded to 4.3% in 2024. The recovery was driven by higher prices, better project execution, and reduced quality costs.
Next is the future forecast. We use a time trend model to predict revenue and backlog, and a linear recovery model for profit margins. In the short term, revenue is expected to grow to 19 billion euros, with an average annual growth rate of 3%. The order backlog will continue to accumulate to 122 billion euros, driven by strong demand in Europe and global markets. However, revenue growth is lower than order growth, mainly affected by policy uncertainties in the US market. For profit margins, it will recover slowly in the short term, expected to reach 8% by 2029. This is because the wrap-up cost of the new offshore wind platform will temporarily affect profit progress. In the long term, the company will enter a mature phase, with revenue growth slowing to around 2%, eventually reaching 23.7 billion euros. The order backlog will increase to 213 billion euros, and the profit margin will stabilize at a sustainable level of 9%. With these predictions in mind, we can summarize the main findings simply. Vestas has successfully transformed from scale first to profit first. The profit margin rebounded to 4.3% in 2024, with a record order backlog. Short-term revenue will grow at an average annual rate of 3%, and long-term profit margins will stabilize at around 9%. With technological innovation and service advantages, the company will continue to lead the energy transition. We can also see the key changes from this chart. Revenue and order backlog grow long-term, and profit margin recovers from a trough and stabilizes. These are driven by service business expansion, pricing optimization, and product quality improvement. Vestas' core advantages are clear: high order visibility, strong service stickiness, technological leadership, and a sustainable strategy to achieve zero waste wind turbines by 2040. However, it also faces risks, such as US policy changes, cost pressures from new platform, and increased industry competition. Overall, the clear recovery path, solid business foundation, and sustainable competitive advantages enable the company to create a long-term value. That's all about Vestas' business development and future outlook. Thank you for your attention.